Hey everyone, it's Nick with Us versus Herd. I'm going to be covering GameStop. GameStop went crazy today. I'm going to look at from a chart perspective, from a short squeeze perspective, and kind of see where I think it's heading. Obviously, during the whole meme stock mania, GameStop was like the number one stock for a long period of time, and now it's back in the news making headlines. So let's take a look. A lot of things have changed since GameStop went a little bit crazy and they launched their NFT marketplace. Now, I will say, like, the NFT and crypto marketplace is in shambles. But let's take a look at the numbers and kind of see, where we're at with GameStop. As of today, right now, the short percentage float is at 23.83%. Short percentage has increased by 12%, which is, basically doubled. So, can these shorts get squeezed? I think so. But will it have the same impact that it had, a year and a half ago? I absolutely not. Like, if you're looking to, basically have a repeat of what happened right here when it went from, penny stock to 483, I don't think that's going to happen. The numbers are way different. Shorts and leverage way different right now. Right now we have to be realistic about this. Sure, you can squeeze shorts just like you can squeeze shorts in any other stock. GameStop being famous because what happens is, like, people think just because you win the lottery once, you can win the lottery again. That's not necessarily the case. And if that's your investment strategy, you're in for a bit of a rough ride. Hope is not a strategy. Hoping that you're going to get paid is not a strategy. Price is what matters and what could happen. So right now, short percentage float 23% is up about 12%, which is a 12% increase. So basically double. Kind of interesting here. Right now, what I'm looking at is, this is the multi-year chart. Let me zoom in a little bit and over the past year. Right now, right off the bat, this purple line is telling me right now it's under the 200-day moving average. Each time, if we look here, each time it's popped up, this thing has got shredded. And if you look at the personality of GameStop, it's been knowing to squeeze and then drop, pretty hard. Because like last time, this happened back in March. The market was rallying, and market actually did fairly well today. However, GameStop's up 14%, which is outperforming the market. But look, last time back in March, this popped back over the 200-day, literally had about a week above the 200-day, and then just got killed, right? Right now, testing those levels, we did almost tap the 200-day, about a week and a half ago. It got rejected. However, it is building some steam here. Look back into here, November. Basically, this is where everything kind of fell apart as well with the stock market. So GameStop has been going down as well as stock market and has been rallying when the stock market has been rallying. So you got to ask yourself, like, what is the situation here? And the situation is the algos are in control of GameStop. Now, one thing that you want to be careful of, this could potentially be a potential pretty big bear flag here. If we zoom in, you just want to be careful. There is a potential bear flag. We'll kind of highlight it here, where it's coming down, and then we have basically a bear flag forming here and a channel forming here. Sure, it could go up and up, but normally with bear flags, we're going to go straight down. But I'm not saying that's going to happen. If it gets rejected at the 200-day, then yeah, bear flag kind of confirmed here. But if it gets above the 200-day moving average, I would feel a lot better that this stock is actually going to be making some headway. Kind of going back a little bit further here, trying to understand the price movement and where things basically shifted. This thing went parabolic, and eventually the 200-day moving average, and I'm using the 200-day moving average because that's the long-term trend. We want to see where this is headed long-term, because everyone's looking for a payday tomorrow, but long-term is what's going to get you paid. This thing was basically very violent. Retail traders were in it heavily. People were getting squeezed. You had the firms being blown up, Melvin Capital getting blown up out of this, and they just had to exit at any price. So you're going to have violent price action. But as you can see, as time goes on, the spikes have gotten a lot smaller, right? The spikes have gotten a lot smaller here. And where things started to go sideways, again, right here was in December. in November, right when it crossed over the 200-day moving average. You also had the 50-day crossing over the 200-day moving average, which represents a death cross. And from there, it just hasn't been able to get up. Sure, you're going to have these rallies, but like in a bear market, you're going to have rallies. So, for me, do I think like this stock is going to head up to 43? Could it squeeze up there? I don't think so. I mean, obviously anything can happen, but right now, like I'm looking forward to clear the 200-day, and it needs to stay up there because right now this is a high risk trade. Like if you're chasing these big percentages today, like the 15 percenters, I mean, this thing, I think there was really no dip today. I mean, just a few dips. I mean, I look at the 15-minute chart, but really just kind of grinded up very slowly, and people are buying all day. Started at 127, so if you day traded this, made a bunch of money. My situation is if it doesn't clear this, I mean, this thing could pop down very hard, which we've seen in the past. Now, it did clear here. I mean, we had some big candles here, but I don't know. It just doesn't look to be that strong. There's also, like, if you look at these candles back down here, back in March, there was a lot more volume than right in here. I mean, today didn't even hit 10 million shares traded, which is I would say, a pretty light day if you're trying to be very aggressive and push this thing over the edge. So, right now I think GameStop, it's in for a little bit of a rough ride. Sure, you get a little bit of reprieve, but I mean, this thing has come down. It looks like it has been leveling out around $80 to $90 a share, which, I mean, right now is acting as support, which is the good thing. So it bounced off 80 here, bounced off 80 here, and the question is, does it revisit 80? Does it break through? Does it form a triple bottom at 80 and then pushes higher? I mean, I think right now with the algos running it, it really depends on if they're going to, rally the market. If we can rally the market, I think there'll be more participation in GameStop. But right now, people are feeling pretty bad. I mean, GameStop is GameStop. Retail is having a rough time and having a rough go. Even though GameStop is trying to innovate in the NFT space, crypto getting slaughtered is definitely not helping the cause here. So let me know what your thoughts are. Do you think GameStop is going to go higher? Leave me a comment. Let me know. As always, stay safe, stay green. It's us versus herd.